Well, hey there, freaks. It's your boy Marty Ben here to introduce this flash episode of Tales from the Crypt. Sat down with our good friend BitcoinTINA to talk about the perfect storm of things that are happening in the world that are bullish for Bitcoin. A lot going on right now, particularly this week in American markets and globally with the coronavirus spreading. I think you guys are going to like it. Quick one, always bullish. Bullish as always with our good friend Tina. This episode is brought to you by the Cash App. Freaks already know all about them. I was actually had a friend reach out to me yesterday. He was like, what's the easiest way to buy Bitcoin? I remember he told me to download an app. What was it? The Cash App. That's what I said. It's the easiest way to buy Bitcoin. He had to be refreshed. His memory had to be refreshed yesterday. I did a little a video on my cell phone showing him how to buy Bitcoin. I did that thing where you record your screen, went to the Cash App, scrolled over to the squiggly line, the chart, over to Bitcoin, hit it up, bought $50, hit $50, want to buy $50, hit buy, held my fingerprint down, hit confirm, boom, $50 worth of Bitcoin in my Cash App. Was able to send it right off to a hardware wallet and basically get my financial sovereignty in less than 30 seconds. It was crazy. All right, so they're letting you stack sats, they're letting you send sats, receive sats, and then on top of that, they're letting you stack slivers of sonks if you want to. You guys have heard about it already, but if you haven't, Cash App investing is now here. If you have a stock that you want to invest in a stock, you can buy as little as $1 with it. If it's a little too expensive, you don't have to buy the whole thing. You can buy a sliver of a stock now because your account is connected to your bank account. Your Cash App account is directly connected to your bank account. You don't have to wait 4 to 5 days. You can start investing today. Cash App Investing is a subsidiary of Square, member SIPC. As always, use the code STACKINGSATS. You're going to get $10 when you sign up, and $10 is going to go to our good friends at Owls Lacrosse. That's Owls Lacrosse. Enjoy this episode with our good friend Tina. I know I certainly did. Take care.
You've had a dynamic where money's become freer than free.
If you talk about a Fed just gone nuts, all the central banks going nuts.
So it's all acting like safe haven.
I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor.
I mean, that's part of the bull case for Bitcoin.
If you're not paying attention, you probably should be.
What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty Bent here with a flash episode. Had our good friend, repeat guest, reach out to me over DMs and say, hey, we need to talk. I'd like to introduce you freaks again to BitcoinTINA. Tina, how are we?
Great. Every day is a good day in Bitcoin.
That's what you're saying. Every all news is good news for Bitcoin.
All news is good news for Bitcoin. All obstacles are overcome by the social layer of Bitcoin because Bitcoin is by its nature anti-fragile.
Yes. And to preface this episode, we are not fear-mongering, all right? This is an optimistic episode. We are just laying the land, giving a lay of the land, and explaining how it may or may not affect Bitcoin going into the future. So it's been a pretty chaotic week in the markets, in the world. Coronavirus you are describing is the perfect storm for Bitcoin. That's going to be the title of this episode. Why do you think this?
Okay, this is the perfect storm for Bitcoin. Now, first of all, Bitcoin is neither a risk-on nor a risk-off asset. Bitcoin is the core to an emerging economic paradigm. In my opinion, for what it's worth, I had believed and continue to believe that in the 2020s, we'll see negative rates. At a minimum, we'll see zero rates, and we'll see massive government spending. I believe that there's a very good chance that the coronavirus may have accelerated this timetable. I don't know how Corona plays out. It's very hard to say. There's a lot of data we don't know yet, and I don't know exactly how it will play out. But I think that it becomes an excuse for government spending that governments want to do anyway, because governments like to spend money. So it becomes a very easy excuse to spend. It becomes a very easy excuse for central banks to cut rates because they kind of want to cut rates anyway, regardless of what they say. They still like to cut rates and they know they need to. So it's not even their fault for cutting rates. So they don't even have to take the blame because there are always these entities who want to go after them saying they shouldn't cut rates. So central banks can throw up their hands. You know, we can't control this thing. Now, some will say that cutting rates doesn't help deal with a virus, and no, cutting rates doesn't. But the thing is, if markets were to crash, and I don't know if markets will crash or not crash. I am very up in the air on that. I had said a while ago that I expect stocks to be essentially flat for a decade. I continue to feel that way. I was somewhat doubtful of that view not that long ago when things were just soaring, but it seems that events have taken a turn that has reeled in that possibility again, that we may be flat essentially for a decade. And I think we're sort of in this push me, pull you environment where it's tug of war between what gets done. So even though maybe stocks should decline because of events, if governments spend like crazy and central banks buy assets, then things don't go down. We have certain things which are immutable, and demographics is immutable, although some told me today that who knows, maybe this thing is a is a plan to get rid of aged boomers. I don't know if that's true or not. I certainly hope not, but I actually don't think it's a plan to get rid of aged boomers and those who are older than boomers. I think, if I had to guess, that nobody planned this thing. This was completely unplanned, and I don't know if it's nature or anything else. But
I hope not for your sake too.
Huh?
I said I hope not for your sake too.
Thanks, I appreciate that. Well, the problem is that even if you don't die from it, I heard recently that you could wind up with permanent lung damage. So, you know, even if you're 25 years old, permanent lung damage for the rest of your life is really not something to look forward to. So you really don't want to get sick. And I don't know if that's, you know, the bad strain or the not bad strain. But I think because it becomes this event which will encourage massive governmental spending, and I think, you know, I think we're going to have huge spending regardless. I don't think it would matter who's in office. I think that you'd see spending either an infrastructure project or a Green Deal or any different ways that you would see just enormous spending. And I think the central banks, the Fed, will expand their balance sheet to keep that spending and the debt issuance from driving rates much higher. It's a very weird environment, but if that view is correct on my part, it becomes incredibly bullish for Bitcoin. Crashing stocks at the end of the day is not bullish for Bitcoin. I mean, if the water in the bathtub goes down, your little sailboat that you have floating on the top of the water is likely to go down with it. It's not going to be helpful to have stocks, let's say, get cut in half. So could it happen? Sure, it could happen. I don't know whether or not stocks will get hit dramatically, but I think that you will see actions taken by central governments, actions taken by central banks that will look to prevent that. Whereas in prior periods, these various entities were always reactive. I think they're going to be far more proactive because we've been living in an environment for the last decade where everything is bubblicious out there. So if capital markets come down very hard, namely stocks, that becomes a pretty big problem for everybody because money conditions get tight. When money conditions get tight, credit conditions get tight, and that becomes very hard for the real economy. So net, I mean, this may be a crazy point of view, but I think that we will see an environment that becomes perfect for Bitcoin. When you throw in the halving with what I think will be the backdrop for very easy money. Additionally, there may be things happening like you saw with Germany and now maybe announced today with France and India. You have you have a positive backdrop for Bitcoin. And so to me, this becomes the perfect storm. By perfect storm, I mean like a really great thing that you're going to see all kinds of forces come together that cause this thing to go possibly higher than numbers that I have said. I have guessed that you see a massive overshoot. The overshoot comes related to stock to flow, which the projection is $100,000. And I have always thought that from a psychological perspective, getting to $100,000 causes a lot of people who are highly skeptical and critical to change their mind and look at this thing very differently and want to jump on board. You get a guy who listened to Jamie Dimon, listened to Warren Buffett, listened to whoever was critical and negative on Bitcoin, and they look at a price of $50, $60, $70, $80, $100,000. They say to themselves, "Oh, I thought this thing was going to go away," and then it's sitting at prices that they think are crazy, and they start to say, "I got to get me some of that." And I think you're going to hear a lot of people saying, "I got to own me some of that." And I have said for a while, and I continue to say, just by 1%, it's 1% won't hurt you. Now, that's not financial advice, but realistically, if you fall off the curb on the sidewalk and it's only like an inch or two, it's really hard to get really hurt. I mean, sure, you could fall down and break your hip if you're really old or really clumsy, but that's not going to happen to most people. And it's really hard to do with 1%. It's only 1% of your net worth. And I think it's a highly reasonable thing. I think by the end of this decade, we can see truly insane numbers. And so the risk reward profile on that is just outstanding. So if I'm at all right about the backdrop for this thing, then it's just become a much, much better investment. And all of these things are coming together, hence the term the perfect storm. Again, not in a bad way, but in a really good way, a really optimistic, really positive way. And think about that. Governments starting to become more accepting, really easy money. And what was the other thing that I said?
Stagnant stock markets for
No. Really easy money. Governments coming together, and the government's becoming more accepting. Now I forgot what I said.
FOMO after a certain level.
No, that was that. No, I'm just talking about the overall backdrop. I have to go listen to what I said to remember.
Interest rates falling below zero.
Well, that relates to the easy money. Well, that will push people into wanting to own Bitcoin. I have to listen to what I said to remember what I said. But it creates a very positive backdrop. Those various things that are happening. And so, the halving. So you have the halving. You have very easy money, which I think is very likely. Plus, you have growing acceptance among governments. I mean, what more could you ask for? To me, that's what you call an absolutely perfect environment. And I think that people really underestimate this. I have said for a long time, all surprises in Bitcoin will be on the upside. And I think people who try to get cute with this, who try to trade it, who try to sell it. Oh, one of the things that really had a lot of impact on me recently is I was having a conversation with another Bitcoiner who was trading TLT options because he wanted to make a bet on long-dated paper, long-dated treasuries. And I told him I was a little concerned. I thought it was a great idea. I think rates will go a lot lower, but he owned some April paper and some May paper. I said, who knows? It could take a while. And then rates were like 150 at the time, and the 10-year yield as we speak is 0.745. So it just got cut in half in like a little more than 2 weeks. So I feel like a real idiot, but this stuff can happen really fast. So
that's something I want to dive into, right? Is it feels like the Fed and markets have been blindsided and they're scrambling right now. The Fed had an emergency 50 bip cut earlier this week. Like you just mentioned, people are funneling into treasuries, driving down those yields, and that's like the Fed cut seemed very bearish to me because it had a 5-minute market rally after the cut initially hit the market, and then markets began tanking immediately again. And the one thing about this virus is it's really highlighting the pain points in our supply chain and the pain points of globalization and sort of the vulnerable situation America has put itself in, particularly. Can you print your way out of this, or do you think there's a chance that there's a total, and this is something I'm sort of leaning towards, there's a total crisis of confidence in the institutions, mainly the Fed, that they're able to control this stuff?
I don't disagree with anything you just said, but I do think that cutting rates will be supportive of markets. I do think if markets were to simply just crash, that can create the environment that makes it a self-fulfilling prophecy. If markets just get taken down very hard, I believe that we are in a world and have been in a world for a long time where the real economy has become the tail and the markets have become the dog. And so I think that if the stock market crashes, if the global stock markets crash, you wind up with overall tighter financial conditions, and tighter financial conditions make for a more difficult environment. I think these were bad policies from the beginning, but it doesn't matter what I think. It matters where we are. It doesn't matter how we got here. It matters that we're here now. It doesn't matter if the rock breaks the glass pitcher or the pitcher hits the rock. It's going to be bad for the pitcher. It doesn't matter if the stocks crater. If they do, it's going to be bad for the real economy, and it's going to be a problem. I agree with you that there's a lot of weakness in supply chains. There are a lot of fragilities in the economy, but adding one more problem to the mixture doesn't make it better. So no, cutting rates in and of themselves does not fix the underlying problems. But if stocks crash in conjunction with the other problems happening, it doesn't make that cocktail a better cocktail for solving these problems. At this point, it probably makes it worse. And I don't think these are good policies. I haven't thought these were good policies for many, 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 many years. But it's where we are now.
I'm not trying to say that you believe that. But
No,
I'm
no,
trying
I
to
know
say,
that. I don't think you're trying to say that I believe that.
Do you envision a possibility in which the policies are completely ineffective this time around? Like, and they pump a bunch of money in, but not even that can keep stock markets at stasis.
Markets are dependent on earnings as well as price earnings multiples. I don't know if multiples can expand. That's why I kind of believe that you're going to see this push me, pull you, because you could have a tough earnings environment, and it could be a tough earnings environment for a while, which keeps pressure on stocks. But at the same time, you get all kinds of support from fiscal policies that become supportive of those earnings. And if you have central banks looking to control the shape of the curve and keeping rates down by keeping bond prices from selling off, then you create an environment where multiples can remain high. So that's why you wind up with this really strange environment of being able to maintain relatively high prices, even though maybe it shouldn't be. I think we're in a world today which is different from the world of the last 90 years, because I think that we, having been through these crises already, the response has become far more activist rather than reactive. And so it's not good that we got here, but we're going to do more of the same to keep the thing going. And that becomes very positive for Bitcoin. And ultimately, in my view, Bitcoin will be the thing that takes us to that next economic paradigm. And it has to become a lot bigger for that to happen. And I think we're in that environment where Bitcoin is going to become enormous in the course of the 2020s. And I think it's going to go to levels that people cannot possibly imagine. I'd be very reluctant to part with my Bitcoin if I were whoever's listening to this. I'd be very reluctant to part with it.
You're not margin trading it right now?
No, I never margin trade it. I sit with fully owned Bitcoin. I also own GBTC, and that I do have for the purpose of selling, because I do have to pay my bills, and and I like to eat, and I like to have a roof over my head. So I do have GBTC whose sole purpose is to sell, because I will need to sell some, but I'm hopeful that I'll have some good prices to sell it at. And I think I'll be right about that. I don't think enough people really understand why this asset will benefit from the environment that we're in. Look, in a worst case scenario, when we saw Cyprus in 2011,
2011, 2012, yeah.
You
Probably
don't own
2012.
money. You don't own your money in the bank. You don't own the money at your brokerages. Those are held by the institutions. We saw that with MF Global. If these institutions go belly up, and I'm not suggesting that they do, but if they do go belly up, they can do whatever they want with your money, essentially. If you hold your own private keys, you actually control your own money. If you have an extremely aggressive inflation, I believe, and I'm not suggesting we have a very extremely aggressive inflation, although I think we're setting the stage for that to happen down the line. That could take 3, 4, 5, 6, 7 years. I don't know how long that takes, but that could take a while, but it can be a very aggressive inflation. Having an asset which is fixed in supply as well as supply inelastic is very much a beneficiary of an inflating money supply, where money will chase that asset because of its natural qualities, in addition to its scarcity, becomes an asset that you want to own. So I think it becomes the ideal thing to own for the 2020s. And I think this is a really interesting kickoff. And this really started with a bang right in January of 2020. And I think, and have thought for a while, that 2020s are going to be a truly spectacular decade. I would not be surprised to see Bitcoin up in the $3 to $5 million range by 2030, somewhere between 2028 and 2032. So my guess is a 300 to 500x return from $10,000. It'd be higher from $7,000. I think the numbers will be absolutely spectacular. And I think
today's
we're
dollars,
talking about something really insane. What's that?
$5 to $8 million in today's dollars.
3 to 5 million.
3 to 5.
You bid me up, Marty. I'll take the low side of that, the 3 to 5 million. I think it's going to be some really crazy stuff, and I think that I actually would like most people to think that's completely off the charts nuts. I'd really prefer they think that rather than thinking it's possible. So
they probably do. I think I'm comfortable enough to say that they probably do. People listening to this be like, you're actually, a lot of people listening to this probably believe you, but outsiders definitely
Oh, they totally think I'm crazy. And I'm really okay with that. I think, they're crazy numbers, but I think that
the world is.
Yes, I think in today's buying power. I think if you have a very aggressive inflation, the numbers will just be whatever. No, I think in today's buying power, if you had one Bitcoin today, it'll buy you what $3 million would buy you today. That's what's going to happen to the value of that, or $5 million, what it buys you today. Which means if you have 10 Bitcoin, you're talking about being like a small whale. And if you have 100 Bitcoin, you are a whale. And I think a lot of the OGs, a lot of them, I think, will lose their Bitcoin along the way, which I'm really happy about, because I think many of them underestimate the asset that they have. They've held it what for them feels like so long. They're like all nervous. You're not using this as a medium exchange yet. And oh my God, it's not going to really work out. You got to push it for a medium exchange. They feel like this 11 years is like this eternity. And I look at the 11 years like it's nothing. And the thing grew from zero to today. What are we at? 170, 180? Where are we today? Market cap.
Probably like 165 to 175 billion, I would imagine.
So
somewhere in that range.
That's enormous. And I think, it's going to grow exponentially in this decade, in my opinion. Will the return be as big as from 0 to 160 billion? No. But in absolute dollars, the numbers are going to be off the charts spectacular. And it's going to be really big, really huge money. And everything's pushing it that way.
No, I agree. The world is insane right now. And I think, at least to me, I tweeted it out this morning, Bitcoin's engaged in a war of attrition. It's just got to outlast the incumbent financial system and the incumbent financial paradigm. All it has to do is keep producing blocks. And this is a good segue into another ingredient of the perfect storm that you're talking about. Again, the regulation in countries around the world. You mentioned France, Germany, India. On Rabbit Hole Recap yesterday, Matt and I were talking about how we think the German and I believe similarly the French regulations or new laws are bearish, but you're saying it's bullish, even though it may be restrictive for companies to start. This is overall good for Bitcoin in the long run. Why do you think that?
It's bullish as can be, because the key to Bitcoin ultimately becoming the money that we use is being large enough to be able to grow and create an internal market that enables us to do things without worrying. You hide in a crowd. Let's face facts. We live in a world where lots of people use cash to do things that they don't want to pay taxes on. So how many times have you heard somebody say, I'll give you cash for a discount, and they get the discount. So everybody knows what they're going to do. And if the crowd is large enough and if the techniques are there are going to be too many transactions to keep track of. So I am not bothered by these regulations. I think that when you have 50 million people, 70 million people in America, 70 million Americans using it, some people will coin join and some people will use Lightning. Will use Lightning, and probably pretty much everyone will coin join, or many will do that. You end up hiding in a crowd. I think what you'll end up seeing at some point along the way is the tax laws will get changed, because Bitcoiners will be smart and they will create political action committees. They will donate to PACs. PACs will donate to congressmen and senators, and will end up getting favorable laws passed. At $500,000 Bitcoin, there are going to be people who should be giving some money to support politicians who support our point of view, who support favorable tax laws for Bitcoin. I think it'd be crazy not to. And if you have 10 Bitcoin, it's $500,000. That's $5 million. That's a lot of money. So you can afford to give a few $1,000s to politicians, and you do it with another 50,000 Bitcoiners. It becomes a lot of money, and politicians will speak, will support your point of view when you give them money. That's how this works. We live in a world where money talks, and I think that it will be a very positive environment. So I'm not at all disturbed. We just need to see number go up, and anything which promotes number go up and enables people to come into Bitcoin is a positive. So even though regulation, so think about this, regulation means you're not banning it. If you're regulating it, you don't ban it. If you're going to ban it, you ban it. You don't regulate it to ban it, because you just ban it. So regulation is positive. It's not negative. Regulation enables people who look at this and say, I don't want to buy Bitcoin because the governments are going to ban it. You say, well, dummy, they just regulated it, so they're obviously not banning it. So you can now invest in this thing. You can be comfortable. This is just like what you're comfortable with. So when you can say to people who have a lot more money than we do, guys who may be in my age of people, that this is regulated and you can feel comfortable owning this, they watch it going up. What are they going to do? They're going to buy it, and they're going to help drive the price higher. So
let's hone in on that.
Huh?
I was going to say, let's hone in on that. What do you think a lot of boomers are thinking right now, especially this week in the stock market? A lot of people your age are.
They're absolutely not thinking about Bitcoin.
Are they worried about the retirement funds?
Top of mind.
Are they worried about their retirement funds right now?
Everybody worries about their money in the stock market when the stock market goes down, unless they're short. Who doesn't worry about the stocks that they own when the stock market is going down?
Well, I guess a better question is how overextended is your generation in stocks?
I have no idea. It's so hard to say, because you can't. Everybody's different. You have some people who have a lot of money, and they may be overextended in the stocks. But I know a guy who likes to brag to me that he bought a lot of stocks in 2009, so he's up a lot in those stocks. I mean, realistically, you're pretty close to the all-time highs up here. So if you bought stocks, the S&P at 700 or 800, and the S&P is now at 2,900. How much can you be hurting? You're still up. Right. You're not happy that it's down. I mean, but you're up multiples, and depending on the stocks you own, you could be up an awful lot. So it depends on who we're talking about. I think it's hard to generalize. I think people like to generalize. There's some people where the average retirement amounts are in the neighborhood of $200,000. There have been people speaking of late that have been using those kinds of numbers. $200,000 is probably not enough to retire on at the age of 65. How much they own in stocks, I don't know. I think that even a retiree who's 65 should today own 1% in Bitcoin. Even if you had only $200,000, 1% in Bitcoin will make sense. The odds of them buying it under 20,000, I think, are close to zero. The odds of them buying it under 100,000, I think, are not much more than zero. And people tend to chase price. That's just how we are. Most Bitcoiners come to Bitcoin, they get inoculated the first time. They hear about Bitcoin. They say, oh, that's crap. And then they don't do anything. And then the price is up 5 or 10x or some number from where they first heard about it. And they say, oh, yeah, I think I'm interested in that. I want to buy it. This happens all the time. This happens with probably most people in Bitcoin. There's only a handful of people who heard about it and bought it right away. At least that's from the stories that I hear, and people can correct that if they know different. But I think that the upside is enormous, and even if you pay $100,000, if I'm right on the numbers, and I believe that I will be, then you still have tremendous upside. So that's really going to be okay. So people will come into this in the course of the next few years. I think this will be the first mainstream bull market. And there's a good chance that, like that first big bull market you had early on, not the one in 2016 and 2017, that this will be quite surprising to where it goes, because there's a global tsunami of money that's going to start coming into Bitcoin. It's going to come in as a trickle. Everything in economics seems to be gradually, then suddenly. Mm-hmm. That's how markets tend to work. Gradually, then suddenly. And that gradually takes a while. exponential curves look linear in the early stages. That's the gradually part. They hit a critical point and then suddenly happens. And I think Bitcoin will be no different. And I think we'll go through a series of these things. And I think the next year, 2, 3, possibly 4 years are quite shocking. Take us to numbers that are really quite crazy. I don't know what the next bear market looks like. I think the next bull market, which we may be in the early stages of, will end up being quite spectacular because the psychology which is set up, and that's a big factor too. So you have all these positive forces happening, and you have this massive buildup of negative psychology. It'll be like a dam bursting as people know what they heard about Bitcoin. They know about the negative view. I mean, how many people, I talk to people and they think I'm crazy. I talk to a lot of people. Oh, yeah, Bitcoin. No, I'm not interested.
People think you're crazy?
Yeah, no, I'm not. I'm not interested in that thing. Don't bother me. Oh, the Bitcoin guy. Oh my God. Gotta get away from that guy. It's the Bitcoin guy. He's nothing but trouble. I mean, people make jokes about this, but it's true. We're annoying. I'm really annoying.
Oh, don't say that.
Oh, I'm sure people think that. But
well, you're touching on something that I'm very interested in, and something I think about a lot too, is after the next bull market or X amount of bull markets, what does the correction look like? Is it as intense? And psychologically, what is a threshold at which people are like, all right, this is here, this isn't going anywhere, and we don't see an 80 to 90% crash again after maybe we plateau, fall 50%.
Okay, so you have misquoted me from our first podcast back in January of 2019. You have misquoted me when I said that volatility will subdue, i.e. downside volatility will become lessened, but upside volatility will remain insane. So I think that there's a good likelihood that at some point, maybe the next bear market, more than likely, definitely the one after that, that the downside will be greatly diminished from what we've seen. Now, I'll give you a caveat. If we were to go to $1 million Bitcoin in the next 4 years, I don't know what it looks like.
That's true.
If Bitcoin were to go from where it is now through a series of moves up to $1 million, I don't know what a crash would or would not look like. It's very hard to guess. If we really overshoot where I think we should go, and I think we should go to that $200,000 or $400,000 range, which people think is crazy. But if we really overshoot, could we crash down to $100,000 or $200,000? Maybe. And I actually don't want to see $1 million Bitcoin in the next 3 or 4 years. I'd rather only see, I know people think this is crazy, Bitcoin going to $200,000 to $400,000, because if you dropped from a peak of 400,000 to 150, which is not nearly as bad as what we've seen, then lots of people will feel comfortable coming in at 150. If you went to $1 million in this massive spike, where like in the last month or two, you went from $500,000 up to $1 million, you'd potentially have a lot of people who just got blown out on really high prices. So how long that takes to correct, it could take a really long time to correct. I don't want to see something like that. Could we see it? It's possible we could see it. I don't want to see it. I think that would be an incredibly hard environment. I think it'd be very hard to trade. I think it'd be very hard to sell. I think the chain would become probably heavily bogged down. We'd have a hard time moving Bitcoin to sell Bitcoin. I don't want to see that. I don't want to see that.
And actually, that brings up a good point. I forget who said it. Core Developer recently said that the pace of development at the protocol level is pacing nicely with the price right now. So Bitcoin is usable at this price, at this adoption level. And it'll be interesting to see how development paces with the price going forward, especially if markets continue doing what they're doing and animal spirits take over. Do you think the protocol